when we look at the economy, there's only one thing that you need to be keeping your eyes on. This one thing is essential for knowing where the stock market is going, where the bond market is going, where the housing market is going, and ultimately where the economy is going. And this one thing is exactly the reason why we are in all of these issues this year, why we are in such a painful place with respect to the stock market, and why we could be in a more painful place with respect to the housing market. That one thing is exactly what you need to be spending all of your time trying to understand and look at to know the direction of what's to come. Welcome. It's nice seeing you. We are talking about a lot of different things here on the Enriching Wealth program, and one of the aspects that I want to talk about this week is related to the number one thing that you should be keeping your eyes on. Now, this number one thing is what all the banks around the world are looking at, what the central banks, whether it's the central bank here in the US, the Federal Reserve, whether it's the European Central Bank, whether it's China or Japan, all of them are keeping their eyes on this one thing. And this will determine basically the fate of the stock market, the fate of the bond market, whether it's the housing, the economy in general. All of these come back to the exact same aspect, the exact same thing that everyone today is looking at. And this is something that you also are needing to be looking at so you can understand the direction of where we are headed with our economy. That one thing, you probably already guessed it, inflation. You see, inflation is something that is here, obviously, but it's really started from about 2 years ago. When the pandemic started, not only did the US, but also the rest of the world started to print a lot of money. And that money printing that we started to really put forth into the economy to help out during the pandemic has now kind of backfired against us. And that's starting to lead to not only gasoline inflation, so what we're paying at the pump, corn, wheat, hogs, cows, like everything related to agriculture is starting to go up in price. Well, that's not it just at all with respect to inflation. We also have anything related to the raw goods that go into the final products that we have. So whether you're buying a car, well, there's a lot of aspects to the metals that go into cars that are going up in price. Well, then we also have durable goods. So you have a washing machine, or you have anything related to your refrigerator. All of those are going up in price. Well, again, that's not all. What else are we seeing? Well, food prices, yes, but even the basic necessities, whether you're trying to brush your teeth with toothpaste, whether you are just needing some things for the kitchen, like all of these things are going up in price because of, well, a lot of times what we're calling it the pandemic, but that's not so much. It's how much money we've printed, but that again is not the entire answer. It's the backlog of orders, it's the shipping that's happened because of the pandemic as well. So when we have to shut down the ports of LA or Long Beach for a period of time, or today shutting down and having a backlog in Shanghai, whether it is the ports in the Netherlands, like all of these are playing havoc on the world's system for just trading goods back and forth. That plays a huge role in anything related to inflation as well. But here's the other thing as well. Why inflation is so sticky high? Well, we have the war between Russia and Ukraine as well. And a lot of goods that we have, especially whether it's fertilizers or you have other wheats, a lot of things are coming from that region that we are not seeing anymore. So you can start understanding why inflation is here. And it is becoming to a point now that we're really starting to understand it. We're really starting to feel it as part of our wallets. Whether you are just trying to scrape by on a monthly basis, or you have plenty of money. No matter what, you are starting to see and feel the effects of inflation. And what that means is that the Federal Reserve now is coming out and saying, we need to do something about this. We need to figure out how to curb inflation. We need to figure out the best ways to fight inflation. And the best way that the Federal Reserve can fight inflation is by increasing interest rates. Well, they most likely, if you talk to many different economists, when you talk to many different people that are thinking through this, they most likely should have been raising interest rates a year ago. That's the thought process now. That's the kind of mode that everyone is kind of attributing, that the Federal Reserve is behind on raising interest rates, and they were the ones that allowed inflation to get so out of control. Now, whether you believe that or not is almost irrelevant. What is relevant is the fact that we are here now. How do we get out of it? How do we fight the inflation? How do we get things back down so it's not going to harm the economy? You see, the higher inflation goes, the less you and I have to spend and have in our monthly amounts, wallets to spend on things that we like. Well, that alone contributes to us not buying as much. That alone contributes us to basically saying that we are not going to be as supportive to our economy. So that kind of puts us into the stagflation type of a feel, rising inflation and a lowering and slowing of our economy. Now that was where we had been from about, call it December through, well, the first part of April, so to speak, is where we've had this higher inflation for longer, while the economy was really starting to be hurt and harmed by it. And so much so that the last quarter of growth for our economy was actually negative. So we have a slowing economy. So stagflation is something that's real. It is something that is here, and it is something that we have been really trying to figure out a way forward with the Federal Reserve. Well, things are starting to change more and more. You see, when we take a look at where we're at today for inflation versus where things were even, say, a quarter ago versus even a year ago, we start taking a look at what you call the comparables and the rate of change. It's going to be even looking like things may start rolling over with inflation, slowing with inflation. Now, it's just starting, so this is something that obviously we could have a little bit higher inflation from here, or we could start slowing down. But that slow pace, that slowing of inflation, is what is to be kept your eyes on the most. Because what is happening now is that we have a slowing of our economy. We have a slowing of the world's economy. And we have the war that's kind of perpetuating a lot of hardships with more goods and services getting around the world. We still have Shanghai, which is basically still shutting down their ports for COVID reasons. Well, all of that is saying that we don't have the goods to be trading, we don't have the goods to be selling. That's going to be a huge aspect to our economy. And if we have a slowing economy marred with slowing inflation, that's a recipe for a hard place for our economy, for the stock market, for the bond market, and housing, gold. Like, all of these things really start to have a hard place when we start seeing both the economy and inflation start to slow down. Well, what does that have to do then with the Federal Reserve? Because we started this talking about the Federal Reserve, and the one thing they are looking at is inflation. The one thing they want to be curbing is inflation. And if we're already starting to see inklings of it slowing down, why are they so worried? Well, they have to be. You see, what's been happening is that now they're starting to have political pressure building. Because whether you are a Democrat or a Republican, you want to show coming into the midterms that you are doing everything that you can to fight inflation for the people that you are working for, your constituents, the ones that have voted you into office. And so the more you can say we have put our kind of thumbs down, our hands down, and really started to fight this with respect to inflation, talking to the Federal Reserve, to Jay Powell, making sure that he understands that we need to be doing something about this, that starts to put some thoughts in place about what's to come. You see, if we raise interest rates more, that's going to fight inflation. Exactly what it's designed for. But it can also kill the economy. So what do we want to be doing? How do we want to be playing kind of the safety net with our assets? It all comes back down to inflation and what the Federal Reserve is doing and will do. Right now, they've just been talking about raising interest rates a significant amount, so much so that we think that right now is baked in that they're going to have 10 interest rate hikes this year. Now, that's what basically the thought process is today, but that doesn't mean it's going to happen. What will happen is that if we do have a slowing of inflation, the economy is not really going any deeper into negative territory, we're just kind of hanging out here, well, we can see that we may get that up to those 10 interest rate increases this year. However, if we start seeing that the Federal Reserve is going to cause us to go into a recession, or even maybe we are in a recession, depending on what types of markers you're looking at, well, maybe they don't go for the full 10. Maybe they only go for 4. And that alone will change the dynamics of which assets you should be invested into and how long we're going to be in this environment where we are really seeing just a hard time to be invested right now. So again, inflation is that topic that we are all interested about, that we're talking about, but that's also the one key element that you need to be keeping your eyes on in order to understand what the Federal Reserve is going to do, and ultimately what is going to happen with our economy, the stock market, the bond market, the housing market, pretty much all asset classes. So that is the reason why, when we talk about things like this, inflation is such a big deal, because it's the number one thing that a lot of policy is based upon. And so that is also something, the reason why we are taking this so seriously right now is with respect to inflation, is because we want to be knowing that if worse gets even worse from there, so we're already in kind of this bad situation, when we get worse from here, then we start to say, you know what, we need to be backing off and just being in a safety net right now. However, is that we can obviously make the change and start saying, here's the great reason why now's the time to be invested, and now's the time that we need to be going more aggressive. But we're not there yet because we don't know what the outcome is. But the more we can take a look at the data, the more we can take a look at inflation, the more we can start putting together some thought processes of what the Federal Reserve is going to do based upon that inflation data, the more likelihood we will have in getting that next step of the stock market, the bond market, the economy correct. And with that, we can start working with the assets correctly. That is why inflation is such a huge issue and topic right now, and that is the reason why this is your number one indicator that you should be looking at. Hey, if you like what you heard here, feel free to share this program with your friends, your family, and go ahead and like the program so that you can be allowing and helping others to be finding this and really learning about what it means to be in charge of their wealth, to be looking at their wealth transfer, wealth protection, and yes, just the investment side of things as well. Check out some of our other programs here, and we'll be looking forward to having more content like this coming out every week. Take care.